Hi, this is Jack from Alpha Charts with a state of the market video. Today is April 26, 2020. And before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, so I'm starting off with SPX, and I'm going down to actually a 30-minute time frame, okay? And so what we are seeing here, I mean, is this here was the bottom, right? Back on March 20th. And then I'm sorry, March 23rd. And then now we're making higher lows, right? Low, 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 right? And higher highs. And we've come back into this green shaded area. So as of right now, on the shorter term time frame, 30-minute time frame, you see prices above all of the major moving averages, right? All the ones I follow, which is the 23-day EMA, the 65-day EMA, and the 150-day EMA. All right. But now when we go to the daily and bring it in and just look at a bigger picture, it kind of tells a little bit of a different story. So, and you see I drew in, potential head and shoulders top forming. Now, it doesn't mean that I expect this to confirm a head and shoulders top. It's just something that I'm watching. But if you can see in the bigger time frame, if nothing else, this has made a kind of like topping pattern. It doesn't look like this. To me, this is a bottoming pattern, right? Long-term bottoming pattern. We'll call that consolidation, whatever you want to call it. And then we bust out higher. Well, this looks different than this, in my opinion. And let's just go to weekly just for fun, right? So going down to the weekly time frame, and let's zoom out. You can see, this and even this looks very different than this, in my opinion. Yeah, I mean, it just really does. I mean, so that's one of the things that has me concerned. Is this a much longer term type of topping pattern? Maybe. I don't know. We'll find out. To be continued, right? But just going a little bit bigger here. But that is something that I am concerned about. Now, looking at just back to the daily, looking at what's going on here, this fight here. So this green area, right, has been support and resistance going back all the way to 2018, right? Resistance, 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 broke through, came back down, then became support, right? All support, didn't care about it here, but now we're back in that range. And so the question is also, if you look at the moving averages, you can see the 23-day, the shortest of the moving averages, nice big uptrend going on there. But the 65 and the 150, yeah, they're still declining, even though they're kind of starting to flatten maybe a little bit. But they're still declining. So I think right in this area is the fight between the bulls and the bears. And if you look at the last week, last 5 days, let's go back a little bit. We've gone basically nowhere, right? Even the last 10 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, boom, right? The last 2 weeks has been just a fight right in this range between the bulls and the bears. So the question is this a consolidation and the uptrend, the more recent uptrend continues? Or is this a place that we're seeing potentially some lower volume happen here and some churn? And then do we make that H, the down, and boom, come back around? Again, we don't have to hit all the way down here. We could hit up here, whatever. Just fill this gap. So the question is this consolidation and then we're going to move higher? Or is this consolidation, we make the H, and then we watch price and see what's going on? Time will tell. I don't know the answer to that, but those are the things I'm watching right now. I'm watching for the bigger topping looking pattern. I'm also looking for what's going on in this area, and we'll see. Now, the best of the bunch by far is the Qs. You should already know that. You see the moving averages already are starting to cross in a bullish pattern. Prices above it all. You do see a lot of distribution the last few weeks on the last few days. Let's go to the weekly chart to see what that looks like. Low volume, but not distribution really on the weekly, but on the daily when you really look in, I do see a few distribution days, 1, 2, 3, 4, a couple accumulation. So mixed bag, but that's a little bit concerning, but it's volume, right? So it matters, but not as much as price. Just a very constructive looking chart. IWM remains to be the weakest. We have not figured out what we want to do as far as big dip. Is this a bear flag? I don't know. I mean, we're seeing a little bit of accumulation here, which is kind of nice. But this overhead spot right here has been important in the past, and we have not gotten above it yet. Also, these moving averages are more severely moving down, and the 23-day is just flat. It's not really rising yet. So I think there's a few more concerns in the small cap, but the constructive piece is the volume. But again, until we get over 127.50-ish, and these moving averages start to flatten like the SPX and like the to some extent the SPX, but we'd like to see price above it. Qs again are the poster child. That looks the IWM, I think it still has a lot more questions. Dow Jones Composite looks more like the IWM. Not much more to say about that. I think these moving averages still need to kind of come on down a little bit more, flatten out again. So the question is this a new uptrend, consolidation, and we continue higher? Or is this a longer term downtrend? This is just a retracement of that downtrend, and we roll over and make that H look, and then we decide what happens back down in this range. I don't know. We'll find out, but that's the two scenarios I think we all should be watching for. Could this continue to go sideways for a while? It could, but eventually it's going to have to decide up or down, right? So yeah, we can move another week sideways, which I think is unlikely, and we'll get into that a little bit later. Looking at the financials. All right, financials again look weak underneath, right? The 23-day EMA, and it's declining again, right? So everything's declining. This is declining. I mean, that's a bearish looking pattern, in my opinion. Yeah, I mean, as long as it stays underneath all the moving averages, it didn't really it got a bounce, but I mean, let's take a look. I mean, 35%, which is a good bounce, right? Heck, that's a good bounce. But now it's given back of that 35%. I mean, to the lows, give back 11% of it, and still 8% from this most recent high. So what do we see here? We do see higher highs and higher lows in the shorter term, but the longer term still looks like it wants another leg lower. Volume is tailing off, and you are seeing a little bit more distribution type volume in here. That was a good day right there, but it could be, just big gap up, big move higher, and then what did it do the next day? Again, on low volume, but still it gave back everything and more. Well, not everything and more, but it gave back a bunch of it. And it filled the gap, right? Filled that gap right there. Next day, lackluster, then it gapped down. So XLF is still looking pretty rough, really. Now, SMH, on the other hand, is the exact opposite, right? So if you look at those two are really important to the market and to the economy. Again, it's that divergent of signals, right? You're getting a positive on one end and a negative on the other hand. And I think that is, that is the most confusing part. And if somebody says that they know what's going to happen, they're lying, right? Because nobody knows what's going to happen. And there's a lot of mixed signals. And you could look at one indicator and it's going to tell you one thing, and look at another indicator or chart and it tells you the exact opposite. XLF and SMH are the two examples. This looks more like the Qs, right? And we have a beautiful looking uptrend from the bottom around March, what was the last, March 18th. prices are crossing. It looks like a bullish cross is going to be imminent, right? Which is a beautiful thing. And what are you seeing in the volume? I like to look at volume. You see some accumulation days and you see some distribution days. So mixed signals, but price says, I think that we have a good spot right here, this 127.50-ish level. I think if price stays above 127.50, SMH looks really, really nice. And I think that's a huge positive for the markets in general. So SMH looking pretty good. Lumber, lumber really hasn't given a great signal as of recent. It did over here by backing off here at the end of January. It did up top here, but hasn't really given me that signal yet that I'm really looking for, right? That would be maybe potentially getting above this area, potentially ahead of a big market breakout, or and it hasn't really rolled over hard either, telling me about the other way. Not a great looking chart and still overhead supply. So I don't know, not much to read from the wood. But let's look at home builders. Now, I think home builders is interesting. Again, it may tell you a little bit about what's going on in the economy, a little broader, and you can see the distribution of home builders in this flag is significant. So as we're going up, I mean, it looks like there's more distribution than accumulation to me. And so this breaking this, it could be a bear flag, could be a new uptrend. We'll find out. But I think a breakdown here would be a very significant tell. So this is home builders, one that I'm watching, and one that looks. I mean, the edge I think is to the bears at this point. Just looking at volume, we just reclaimed the 23-day EMA on Friday. So anyway, that's home builders. Looking at copper futures versus gold futures, and this is something that I'm watching, and we broke down below this area. And why does this area matter? Well, let's go to a weekly chart, and you can see that this area was the low from 2009. Now we're below that. So this is, I think, important, because if we stay below it, that's bearish, right? And you can see, let's go back to the daily. You see, it's kind of holding this level right here. But if we regain this, I think it'll be a big, big positive for the market. So again, copper futures versus gold futures. Yeah, I mean, so now we've just consolidated from March 23rd, right? And now we're all the way into April 24th. So a month we've gone sideways in this. And again, a pop up above this area, and I get much more bullish. And if we start breaking down below this area, I'm going to be much more bearish. So we will see what's going on. So next up, let's look at some. Let's look at gold and silver next by themselves. So when you look at gold, I mean, yeah, I mean, breaking out to, what is this, 7-year highs, this big base area, kind of, broke out of it, had this beautiful shakeout, then right back above it. So I think that's really bullish for gold. Gold miners are also looking amazing, right? Broke out, and that's a good look right there. That's a really good look. You see the accumulation pattern, even though it's on low volume. It has moved quite a bit. I mean, this shakeout was absolutely brutal. I was long some gold names, I think in here. And luckily I was able to get out before the big moves happened. But this is absolutely brutal. But now we broke out. So that is very nice looking. So we'll see if this will back test or if it just keeps going higher. But again, huge area that it broke out of back from 2013, 2016, 2019, earlier this year, and now the breakout, right? The more times the level has been tested, the more likely it is to break, and that is what happened. Look at the frequency, right? You had a big time difference here, big time difference here, little one here, much smaller one here, and then the breakout happened. So that's miners, silver. Now, so with gold up, gold miners up, silver, yeah, not participating, right? Silver is just not participating. Big down, came back, and it's just a laggard. So again, there isn't that silver kind of tells you how much fear is in the market to some extent, right? Because gold goes up, but with silver is up or even outperforming gold, which it is not in any way, shape, or form, that would make me much, much more cautious, right? But again, we're not seeing silver outperform gold. We're seeing gold take off. I think those are positive things. Looking at bonds, TLT is near all-time highs. I mean, so bonds are up. Again, it's just another mixed bag. Now, for bonds to go up, do stocks have to go down? No, but usually you don't see them. I mean, the correlation isn't usually one's moving in one direction and one's moving the other direction, right? So the correlation usually isn't in the same direction, but right now we have bonds at all-time highs, TLT. So that's that. Looking at high yield bonds, on Friday, the stock market was up, yet high yield was down about 1%. And so you're seeing some distribution start to creep back in, and it's now below all its moving averages. And so high yield going lower is a risk off indicator, and high yield going higher would be risk on. So we had nice risk on, and now it's rolled back over. So I think this is something to watch. If this continues lower, that would definitely be a negative for the market. And looking at credit spreads, so we peaked back on March 23rd, right? And we have made a series of higher highs and higher lows, but now we're starting to see this rotation potentially back up. So obviously, if high yield drops, right, and government bonds go higher, this will then begin to widen again, right? And that is again a negative for the market. We don't want to see widening credit spreads. We want to see a tightening credit spread. And as of right now, again, we do have a lower highs and lower lows, but this look right here may look like it wants to go back out. So I'm watching bonds for some information. The VIX, I mean, that's a positive, right? So the VIX keeps falling. It's still elevated, right? 35.9, 36, right? So VIX is still elevated, but that's a good look. And so once we get below 24 and a half, 25, I think that would be very, very bullish to get back into this 24, 25 range. We're not quite there yet, but I think the action is pretty good. Again, VIX started coming down on the 16th and has continued on this downward, more recent downward trend over the last month. Looking at the value line geometric index, let's go to the chart. So this area, let's go weekly. It'll be easier to see everything. So this area has been important, and I could even pull this line back and show you how it's important. I've been all the way back to 97, right? It was important over here in 2002. It was important over here in 04. It was important in 2011. It was important over here in 2016. We ripped through it, and now we've come back into that area. And, and so mixed signals here, but until we're above it, it's very hard to be bullish. Now, again, if we do break out, again, if this is some kind of bull flag, in the smaller time frame, and we rip out above it, okay, that's different. And then we have a level of support here potentially, and that's great. But as long as we're below it and these longer term moving averages are turning down, I'm still remaining cautious in the market. So we'll see. Maybe this is a V bottom and it's consolidation and uptrend continues, or again, that little H-like pattern comes to fruition and we retest this 300 area in the value line geometric index. We'll see. So percent of stocks over the 200-day moving average. Again, it's more of it's a breadth indicator, right? And we're right at 20.4%, right? 20.41%. I think 20% is an important level. So, um, yeah, so this is where we're at right here. And so that shows improving breadth, right? So that's good. The more above the 200-day moving average, the better. More participation. And so, yeah, that looks good. It's constructive. Again, we like to see it continue to rise. I think this 20 level is 20%ish level is important level. And looking at the percentage over the 50-day moving average, we're at 34%. And again, this looks even more constructive. Again, it's a shorter term moving average, so that makes sense. But yeah, I mean, big V bottom, much deeper than 2018. If you look at it, the sell off was much more severe than 2018. But the recovery looks very similar. So maybe we are having another 2018 like V bottom. That's very possible. Just keeping an open mind. But I think the breadth is improving nicely. And then looking at the put call ratio again, I do like to follow this equity only because we don't want the hedging indexes in there. Yeah, I mean, so it's leaning slightly bullish, but nothing crazy, and recovered nicely from the 2012 March 2012 high over here at 1.5, and yeah. So do we just kind of muddle around and go sideways, or do we have one more spike up like I'm hoping for? In some ways, I want one more fear to get a definitive, call or tell on the market. I may not get that. I'm still high cash level. I do have a slight net short position in my own personal trading right now, but I do have things on both the long and short side. But the signals are mixed. I haven't seen, they're improving. There's no doubt about that. And when I look at what is performing and outperforming, so one of the big areas I'm watching, software, right? So here's software. And again, has that kind of head and shoulders looking type pattern or topping pattern. It may not be, but I think this area has been very important, and price has now jammed itself right up to that area. So is this a place we want to add risk, or is this a place we want to be more cautious? In my opinion, this is a place to be more cautious. You see the moving averages as they are flattening, prices coming up right into the top of the 65-day, and here's the 150-day coming down. Here's an area of potential supply, and so if we're going to roll over, this would be the area to roll over. And if we don't roll over, that's information too. Now you can see there's been a lot of good accumulation going on in this name, so we could move higher, obviously, but this is the area that I'd be more concerned with. The software, super hot. Then you have cybersecurity. Again, very hot. Looks even better. Look, prices now above all moving averages, and they're moving back up. This looks really nice. So maybe we just moved in a sideways period for the last 2 years in cybersecurity, but this type of look here is very constructive. I like that. And then, again, we have semiconductors. Again, above all their moving averages, looking really constructive. This is an indicator as well as a trading vehicle, and the individual names I think are really important. And this is very constructive. With that being said, software, cybersecurity, and semiconducttors seems like it's a very crowded trade right now. Meaning, when I look at my stream, it's all the same names. We'll call it maybe 25 or 30 names, maybe even up to 50 names between those three ETFs that I'm seeing over and over and over and over again. So on my Twitter stream, that's what I'm seeing. Now I do follow a lot of people that look at for growth names, and there's a lot of growth names in those sectors. But it also maybe telling me it's a crowded trade. Again, it's not a standalone signal, but it's just one of those sentiment type things. It's hard to quantify, but yeah. So, but they look great, right? They're improving. They look great. They're leading. They're outperforming. I mean, my preferred, what I prefer to see happen, not that I get to choose, but my preferred thing is I would love to see a rollover. It doesn't have to come all the way down here, and then the breakout, the true breakout, and then you can really see what's holding up once we get one more sharp pullback. That would just line up perfectly for me. I don't think the markets will be listening to what I want, but that's what I would love to see. All right, so one last thought also. So the last month, things have kind of gone sideways for the most part and recovered a bunch. And so that was on a lot of bad news, right? Unemployment through the roof, and people guiding down on earnings and so on and so forth. And so the question is, and it's been posed by other people, not just me, is this a buy the rumor, sell the news type of event? Meaning, when the news is bad, we're buying, and when everything starts opening up again in May or in mid-May, is that when people start selling again? I don't know the answer to that, but that is again on the list of possibilities. A buy the rumor, sell the news type event for this. We'll find out. So my final thoughts is that there are mixed signals, right? I mean, SPX is a poster child for that. Mixed signals going on. This V-shaped bottom looks like it's looking fine so far. Looks very similar to the 2018 V-shaped bottom. We'll see what happens here. It is at an inflection point. Does it roll over? Does it continue higher? I mean, in general, this looks like a longer term top, but you could also point to other areas that look like longer term tops too. So in and of itself, it's not a signal. It's just an observation. Volume has kind of started to fade off a little bit as we are going higher. Something of interest. Many charts are coming up into this resistance area, so we need to be cognizant of that. So maybe let's see what happens before adding more risk. And yeah. Oh, and then earnings this week. So Joe Fahmy posted that this morning. Big earnings this week, right? And also there's a Fed meeting this week, right? So there's going to be a lot of information coming in this week, and the reaction is going to be the most important part to it. And Earnings Whisperer put out their weekly chart, and I mean, look at some of the names here. On Monday, let's see who looks really, really interesting. Applied Materials, that's a good one on Monday. But Tuesday, you have AMD, huge. Airline, Southwest, right? Dexcom, Starbucks, Ford, right? That's a big one. Pepsi, huge. Caterpillar, that's going to tell you a lot, right? You have Boeing on Wednesday, Tesla, Microsoft, I mean, Facebook, Teladoc, right? Qualcomm, huge names this week. Twitter, Apple, Gilead, Amazon, missed that. American Airlines, another huge airline reporting. And again, we'll find out what's really happening. Atlassian, huge one. So lots of big names reporting. And then they've got Fridays this week. So Fed meeting, huge names reporting. Again, I still have a very large cash position. And I won't say I'm nervous about this market, but I want to see some proof. I want to see price get above the 65-day EMA. I want to see things start to flatten out better. And then we'll go from there. Again, should be a volatile week, I would expect this week. Good luck, everyone out there. Hope you all stay safe and take care.